morning and good afternoon, and welcome to the September 12th WASDE Review webinar. My name is Greg Horstmeyer, Editor-in-Chief at DTN, and I'll be your moderator for today's event. Glad you could join us, and I hope harvest is beginning to move along wherever you are. Heading up our WASDE coverage today is DTN lead analyst Rhett Montgomery, and we welcome Rhett back from his vacation last month, much needed break. I also want to especially welcome everyone to our new Zoom platform, which is going to have some advantages that I think you all are really going to like. I apologize that there was some confusion around the links to it, but I think we'll get those worked out. And as I said, I think there's some advantages to this new platform we're going to use that everybody that participates will appreciate. As always, the audience for today is in a listen-only mode, and you can ask questions at any time during the event. To do that, you'll see a bar at the bottom of your screen, and there's a Q&A box down there. If you click on that, you can pop questions in. There's also a chat function in this platform, so if you have problems or issues and you want to talk to our production team, Nick and Susan, you can send chats to the group there, and we can help out as time goes on, or if you have any other issues that pop up. But we'll collect those questions and we'll save them for the end of after Rhett's presentation, and then we'll go through them as normal. As always, it's being recorded, and one of the advantages is, and instead of having to wait for a couple of days to get the rebroadcast of this, we should have this available later this afternoon, and we'll be sending out links and putting announcements up on the DTNPF website around that. So with that, Rhett, a lot of things going on, a lot of conflicting noise in the environment in terms of what yields may look like. What did the September WASDE report have to put into all that?
Thank you, Greg. Yeah, absolutely. As you said, it was a very anticipated report. I believe this one in particular, just with some of that drama you alluded to over the last several months. Obviously, a very good growing season up through July, but then some weather troubles through August and early September for some parts of the world as well. I think traders are really looking forward to seeing how the USDA viewed those recent developments. So for today's report, as always, there is bullish and bearish aspects defined. We'll go into it here in finer detail, but see if I can. There we go. So we'll start with corn. I just like to lead off with this chart, just kind of showing that, here as we sit in September, still quite a high degree of uncertainty with these estimates from the USDA. You could make a chart similar to this across all the categories of the WASDE. I chose to focus on the corn and soybean production, as that is, of course, the highlight of this report. I think a lot of traders and analysts were probably flipping to those pages right off the bat when it released here an hour and a half ago. But you can see still anywhere between right around a 7 to 8% degree of error either way can be expected in these September estimates. As you can see, the October and November, and then of course into January, are what really offer the highest degree of confidence once we have some actual field data to really go off of. The USDA does incorporate some plots into their yield estimates this time around, but it's obviously still very early in terms of being, not even the middle of September yet. So just to put a grain of salt on this, there's still a lot can and will still happen when we're talking about these estimates and forecasts as we move. Starting off, just to look into the corn balance sheet, the changes here for September. The one that jumps off right off the bat is at the very top, the USDA adding again to its estimate of planted corn acreage in the U.S. up now to 98.7 million acres. That's extremely high, the highest certainly in over a decade. I actually didn't go back and look, but that's really the big factor in determining this large supply that we're now expecting. That the yield almost was an afterthought once I saw that number. We did, as you can see, the next line down, have a cut in the yield. They cut it by just over 2 bushels per acre. That was widely expected. In fact, that was a little bit higher than most traders were expecting anyway, but didn't really matter when you add another million plus acres to the mix. So that all said and done, that's going to equal a 16.8 billion bushel corn crop according to USDA. That's a record, far and away a record by about 1.5 billion, outdoing the 2023 corn crop. So going down the curve here, the I guess semi-bullish thing, or why I really am classifying this as a neutral report for corn, is that despite that increase in production, we did see a decline in their estimate for ending stocks, down now to just slightly to 2.110 billion bushels here for the new season. That was as a result of higher exports, now up to 2.975 billion bushels. We'll take a closer look at that. But otherwise, jumping quickly back to the old crop season, we did have some adjustments there as well. USDA trimmed back their ethanol usage bucket, which it seemed like that was coming. That was widely anticipated, just with what the weekly data from the Energy and Information Administration had been showing, as well as monthly USDA corn grind reports. So the result there in the bottom line there was a 20 million bushel increase to the carrying stocks as well. But still kind of a semi-optimistic showing that despite the higher production, higher carrying, still trimmed the ending stock slightly due to some very strong demand anticipated, obviously with the low corn price driving a lot of that. Just to look at the corn yield state by state results, as you can see, really declines across the entire U.S. The biggest drops coming from Kentucky and Missouri. Those were, expected to really, Arkansas up to Ohio, really in a diagonal across the Ohio River Valley, was very dry through August and thus far through September as well. So that's expected to be where we saw those sharpest declines. But as seen here, really a decline across most key producing states, especially in the heart. 3 bushel per acre decline in Iowa, 2 in Illinois, and 1 in Nebraska. Really leading the charge in that 2 bushel per acre cut the USDA gave on the national. Jumping to the world corn market, this is a look at the old season that is just ending. It was a mixed report overall, I would say. The main feature for the old crop that we're just leaving is the USDA did increase their estimate for Brazil's corn crop by 3 million metric tons. Kind of followed suit with CONAB Brazil on Thursday, raised theirs. They're actually north of 139. They're calling their crop a record currently, but the USDA still a touch behind, not quite at record level. But I guess the optimistic thing here is we're seeing that increased production not going to the export market. They did raise the domestic use in Brazil just a touch, but as a result also raised their ending stock slightly. But thus far, not expecting that extra production to really be a competitive factor with the U.S., at least on the world export side of things. As we look down, I also wanted to draw some attention to the China situation. 193 million metric tons of stocks. That is a significant decline from the past year. And as we'll see on the next slide, the USDA also anticipating another decline into 2026, which will put the Chinese held stocks at the lowest level in about a decade. So that will be something to watch too as well here as we move. This is a look at the current season, which just began. As you can see, slightly higher world stocks for the old season as a result of that higher production in Brazil. But it flowed through and resulted in a slightly less amount of stocks in the world at the end of 2026. And basically that's having to do primarily with a higher degree of trade, higher exports expected across the globe. Looking down at Brazil in particular, you can see that higher carry-in kind of flowing through, but still expecting by this time next year to see a drawdown in Brazilian stocks as they continue to just use more and more of that corn domestically. You can see a 1 million metric ton increase in the domestic corn usage for Brazil. So other than that, as I alluded to, China's production for next year expected at 295 million metric tons, 321 million metric tons of use. Those are unchanged from last month. and expecting less stocks as well. I believe it's in the 178 million metric ton area. That's going to be down from over 200 million metric tons just 2 years ago. So we're seeing a drastic decrease and a very rapid decrease in the amount of reserves that China is holding. So not really pointing to any dire needs to import corn yet, but definitely something we'll want to keep an eye on as we move forward. Keeping an eye on the new crop export commitments. This was obviously we talked about the sharp increases in demand we'd seen from the USDA for the 25-26 marking year. The exports are really the shining star of that component. 890 million bushels of corn commitments are up just under 70% from the same time a year ago. That's as of Thursday morning's most recent USDA data. The USDA did increase its old crop export estimate by 10 million bushels to 2.83 billion. That is a new record, if true. The weekly USDA data was a touch lower than that, but we'll have to wait to see what the Census Bureau has to say about that. And then for the new crop season, the USDA expecting the U.S. to build on that yet again, up to just under 3 billion bushels, 2.975 billion bushels of 526. Truly an incredible number, up 5% year over year, if true, and really doing a lot to soften the blow of this record corn crop. So it'll be very interesting to watch the weekly data here moving forward. Obviously, we're off to a great start. We have a huge lead over that number, 70% versus 5%, huge lead still. But it'll be very interesting to watch this as we move through the fall here, when we should be continuing to garner a lot of business, especially if our corn price as a result stays competitive. Right now, it is among the most competitive offer in the world out of the U.S. Gulf. Looking at the ethanol margins, as we talked about, USDA did decrease their old crop ethanol projection by 35 million bushels. They left the new crop unchanged, but it is expected to be a solid increase, about a 130 million bushel increase or so year over year into 2026. And this is really pointing to a good start anyway. Our September 4th production, the week ending September 4th, was the highest in 2 months. And you can, looking at this chart, you can see why. We've seen just a very impressive and rapid improvement in ethanol margins, especially over the last few weeks, as we've seen ethanol prices seasonally increase here. But as you can see, this is a gross margin, so not counting any estimates of cost of production or operating costs, but just under $2.50 a bushel, according to the USDA, for an Iowa ethanol plant. It's quite a healthy margin, so should be trying to keep the corn grind to a maximum, although it's not uncommon as well to see a little bit of downtime in the month of September ahead of harvest. So something to keep an eye on there. But overall, this points to ethanol plants certainly trying to keep their grind at a maximum here as we move forward. And then lastly, on corn, just a quick look at the basis. This kind of tells the whole story. The red line is your current year 2025 basis, currently 42 cents below the December board. That's the third weakest of the past decade. That's behind 2017 and 2018 are the two thin black lines below that level. So as you can see, we're about a dime below where we were this time last year in 2024, which was at 32 or so under, and we're well below the 10-year average as well, as indicated by the green line. So it just shows that grain buyers out there certainly seeing a record supply is coming in as well, and they're pricing it into their space here accordingly to manage that here as we move through the fall. Jumping quickly to the soybeans, first off with the U.S. soybean balance sheet. Again, the first thing that jumps off is the acreage. They did just slightly, not to the degree of corn, but did slightly increase the soybean acreage up to 81.1 million acres. But the really, I guess, disappointing, for lack of a better term, thing about the WASDE today was the yield drop. Only a tenth of a bushel drop penciled by the USDA to 53.5 bushels per acre. That is a record yield by a bushel and a half, if true. I think a lot of traders were expecting less than this, especially with the dry and hot August we'd had across the eastern belt. I guess there's still time. The USDA will surely be looking into this, in October and November. So maybe we're going to have a bit of a delayed response, but it certainly was a bit of a surpriser to me to see only a tenth of a bushel decrease there. As we move down the balance sheet, old crop season was left unchanged by the USDA. Into the new crop season, the demand factors are increasingly important in conjunction with that yield. The USDA did decrease its forecast for exports down another 20 million bushels. That brings the total cuts since June to 130 million bushels now less exports expected, largely as a result of no purchases from China as of yet. The silver lining, or to soften the blow a bit, the USDA did increase crush demand by 15 million bushels, offsetting that, at least partially offsetting that, which is a little bit of a bullish news here. And, seeing ending stocks only increase 10 million bushels, I think for now it sure seems like the soybean market is taking that as a bullish signal. We had, when we started the call, I looked and I believe soybeans were up 14, 15 cents. So heading towards a double-digit gain even after the release of this report. And I guess I chalk that up to maybe some traders simply not believing that yield will hold at 53.5 bushels per acre. And should it not hold, in my mind, we're starting to push or feel for that floor of what I think is reasonable for exports. And I'll show you why here briefly on another slide momentarily. But I really think we're currently on pace to match what we were doing during the first trade war in 2019. Which is really keeping me optimistic that it might prove more difficult than some think to build stocks up year over year from that 330 mark in the 25 season moving. Looking at the state by state results here, kind of as you'd expect across that. On the right side, you can see just the degree of dryness across the eastern belt. It's really matches up fairly closely with what we saw in terms of declines, especially for Kentucky, Missouri, into Indiana and Ohio. But kind of in a way surprising not to see anything taken out of Arkansas or really Illinois. I'd heard some concerning things being in Decatur for the Farm Progress show just a couple weeks ago. We'd heard some concerning outlooks from some producers right around there just about how dry it had been. So a little surprised to not see any cutback in the Illinois forecast, but time will tell on that. But for now, it would appear that the good conditions in the West, you can see increases from Nebraska through Minnesota, or excuse me, through Wisconsin, Kansas as well, offsetting any concerns for now in that dry eastern belt. Looking at the world balance sheet here for soybeans, very quiet on the old crop side of things for the season that just ended. It is worth noting that the USDA did not increase the Brazilian estimate. They left that alone at 169 million metric tons. They did slightly adjust the Argentine estimate. CONAB Brazil had raised theirs to 171. So time will tell on that. USDA is not quite, I guess, as optimistic or bearish, whatever term you prefer, on how many soybeans were produced in Brazil. Still a record crop, but not quite to the degree that the local Brazilian agency is suggesting. So otherwise, as that flowed into your new crop balance sheet, as you can see, it was kind of a neutral to even semi-bullish on the world scale. We did have less carry-in stocks as a result of those changes that we were just talking about. And then really, as you go down the world curve, it's really calling for, despite steady production in the U.S., are expecting slightly less world production, slightly less world domestic usage as well, but keeping the exports solid is leading to just under a 1 million metric ton expected cut in the amount of soybeans left over in the world here as we work through 2026. Also just circled the South American crops. Those will be of increased scrutiny here as we move forward, especially as Brazil starts to look to plant their soybean crop here in the coming weeks and months. As that flows through, the USDA, mainly their changes all came from the 24-25 balance sheet for this, but they are expecting a mixed result there. Higher stocks for Brazil and slightly less for Argentina, as Argentina is expected to join the World Export Program in a heavier way moving forward. Expected to process less beans internally than previously thought, excuse me, and export those beans instead here as we move forward. Looking at the soybean export pace, this was the chart I was alluding to when I say I still hold at least a hint of optimism as we move forward here for the U.S. export program. New crop commitments are 34% below 2024. The USDA expecting now 1.685 billion bushels. That'd be down 10% year over year. So there is, I guess, still a little bit of room there for negative adjustments, but looking at this chart, I would just point your attention to both the dotted green line as well as the solid red line. The solid red line being our current commitments, right around the 400 million bushel mark, and then the green line being what we achieved in the 2019-2020, kind of in the peak of the first trade war with China. And to me, we're really just trending right along that line. If we continue to follow that line, then to me, there's really no reason to believe yet that we won't see increased business from other countries, essentially, that would help soften the blow from China's absence from the U.S. market. It is worth noting that in 2019-2020, we exported just under the USDA's estimate. I think it was 1.682. So it's really, they're estimating right in line with that year. And thus far, we're right on pace to achieve an export program very similar to that. And again, depending on where this yield ends up, if we do see a late slip in that yield as a result of that dryness we saw, then it could push those soybean stocks, especially given the strong crush, back into a semi-bullish position here as we move forward. But again, it's going to be very highly determinant on that yield. Thus far, the yield is hanging in there enough to really keep us out of any sort of shortage situation, I would say. But I think based on today's price action, we can see that some traders are maybe starting to anticipate that'll be the case as we move forward. This kind of ties into that as well. This is a silver lining, as I phrased it in the title. U.S. soybeans, despite their record crop out of Brazil and a decent crop out of Argentina as well, are the least expensive offer in the world. $11.15 out of the Gulf. Brazil, almost over $1 higher than that currently, which is really just incredible to see the continued rise in their price, just really due to very high demand for those beans, both in Brazil as well as in the export market, obviously from China. So really, eventually, if this keeps going, they're pricing themselves out of the world market when it comes to other countries that will be looking for beans and will likely be coming to the U.S. To fill those needs. Quickly looking at soybean basis, the same story as corn, really. It's 79 cents under the November. Again, the third lowest of the past decade. It is behind 2018 and 19. That is the first trade war, and I don't believe that's by accident. That's as to be expected. We're really seeing it be the national soybean basis be dragged down by the weakness in the northern plains specifically, as those elevators in North Dakota, South Dakota, highly sensitive to any drop in business from the ports in the Pacific Northwest. So this works in conjunction with corn basis as well. You're seeing elevators throughout the countryside having to be selective right now. Given the size of the corn crop, you obviously are going to usually avoid putting soybeans in a pile on the ground. So if you're reserving a bin, one bin for soybeans, you kind of have to be willing to set your price at the level you're comfortable with. And unfortunately, right now, that is reflecting a really weak basis here historically. Lastly, jumping to the wheat market here, pretty quiet, at least on the U.S. side of things. No changes to the U.S. yield. I was expecting maybe we'd see a little trim back from the spring wheat crop after the cut we saw in August. Wasn't the case, so kept the production unchanged at 1.93 billion bushels, just a touch below where we were last year, despite lower acreage. The real feature of the changes today was a 25 million bushel increase to wheat exports, and that was moved directly to the bottom line with a 25 million bushel decrease to the ending stocks. So that does push our ending stocks for wheat from the highest in 6 years now to the second highest in 6 years. We are forecasted now to drop stocks below where they ended up in the 24-25 season. So the wheat export program doing a lot of the heavy lifting there to draw those stocks down. Looking at the world balance sheet quickly for wheat, this was really the bearish side of the report here for wheat. As you can see, moving across the different categories, the first one you'll draw your attention to is world production. Over 10 or just about 10 million metric tons, just under 10 million metric tons of more wheat production month over month. It's expected. If you look down at the bottom left-hand side, red box, just circling the major exporting countries, the major wheat producing countries, pretty much steady increases in all of those outside of Argentina, but Argentina more than offset by Australia, a 3.5 million metric ton increase to Australia's crop. Another increase to the European Union and Russia as well. And then I guess another bearish factor is, despite that increased production and not really expected to be offset by a whole lot more exports, especially, looking at Russia. Russia, 1.5 million metric ton increase to production, but a 1 million metric ton decrease to exports. A very unusual thing to see. Usually their production and exports go hand in hand, very highly correlated positively. But it just goes to show, I think, as another chart I have will show, that the wheat market is very self-sufficient right now in getting wheat to where it needs to go, not as much reliance on the heavy hitters in the world currently. Quickly, just looking at the U.S. pace of exports, we are 19% above the same point last year. 900 million bushels is what the USDA is now expecting. That would be a 9% increase. So still a little bit of room there, but it is worth noting that sales have been slowing. The last week's sales as of the end of September 4th, the week ending September 4th, that is, were the lowest in just about 2 months. So we have started to see that decline almost weekly. Really, as European and Russia offers have kind of undercut the U.S. currently. So that's something to keep an eye on here, that orange line on this chart as we move forward. But right now, sitting in pretty good shape to hit the USDA's goal. This was the chart I was briefly alluding to. Just kind of tells the story of the efficiency of the wheat market, especially in the last 12 or so months. So basically, I've ordered this chart across the last 3 years, just what I would call the major wheat crops around the globe, beginning with India through the summer and then ending in our winter season with the Argentine and Australian wheat crops. And as you can see, after today's adjustments are taken into account, there's really only one country in the past 12 or so months that struggled to go above its 5-year average on its most recent crop, and that's Ukraine. And I think you have to put an asterisk next to Ukraine because their area is just obviously under siege as they deal with the invasion from Russia. So I think that's probably a lot of the noise you're seeing there is simply there's some land that is now under Russian occupation. So otherwise, though, a lot more green lines than red lines as of late leads to a lot of price pressure and not a lot of mobility in wheat too across the globe. As these countries are really growing what they need and growing it well over the last recent history. Just to sum up today's reports here quickly, corn, I see it kind of just as a purely neutral report, to be honest. It's, the record corn crop on even higher acreage. I suppose the acreage was a shocker, but it really didn't offer traders much that wasn't already expected when it came to this report. We already expected a record corn crop. If anything, the increases in demand were a bit surprising to me, at least to the degree of them. So maybe that keeps some degree of bullish optimism. And to do just with the seasonality, I think you'll still maybe be looking at, even in years of big production, a post-harvest rally isn't an unheard of thing. So it still feels like we're maybe feeling for long-term lows. Certainly we're in August. And I just don't think today's report would really drastically change any trader's outlook here as we move forward, at least in the medium term. Soybeans, I'm neutral to slightly bearish. Lower world stocks. The U.S. yield uh, didn't decline yet as much as I expected it to. And another cut to the soybean export forecast that was offset by higher crush, and thus far that seems to be the saving grace. The market would surely disagree with me on this. That it doesn't really seem like they're seeing it as all that bearish at all, and I think that might have to do with traders not really believing the yield at this point, given that weather through August. But time will tell on that. And then lastly, wheat, neutral to slightly bearish as well. Less U.S. stocks on higher exports. Almost every significant world crop, though, around the globe increased. And as a result, that pushed world stocks of wheat another leg higher here as we move into the last quarter here of 2025. With that, that's the next USDA reports here come out on October 9th. Just like this one was highly anticipated, I imagine that one surely will be as well. And we'll have obviously a higher degree of accuracy, a lot more actual field harvest data to go off of there for the USDA and in formulating their estimates. So with that, that's all I have here for the September WASDE, and we'll turn it over to questions.
Yeah, Rhett, we've got a couple of good ones. One of them is since we've got the most planted acres of corn since 1936, and we've got a pretty good bean acres crop, which actually increased a little bit in terms of acreage. We didn't reduce acres anywhere else. Where do you think where are these acres coming from?
Well, a big one on corn, I think, was cotton. So I didn't look at cotton today's report, but I know in the last few reports or through the year, cotton acreage was expected to be the lowest it had been in some time, and it's been steadily declining in the U.S. for several years. It kind of still has prone to some big swings, but I think it was something like 9 million acres of cotton down from over 10 or near 11 in the last year. So I think we got some from that. Otherwise, we've seen other third-party crops like sunflowers consistently decline in the southern plains. Spring wheat is another one that I think, and durum, another thing that I think a lot of guys are switching from more and more. We're obviously, we're, I guess you said 1936, so not quite a 100-year high there for corn acres, but we are, over 100 or at or near a 100-year low in wheat acres. So that's kind of maybe an offsetting factor there. But then other than that, a lot of it is a direct shift just from soybeans into corn. I mean, we saw the soybean acres last year closer to 86 plus million, 87 million acres, down now to closer to 81. So I think those are the big three things. I think cotton was a big driver though this year in the South.
Yeah, we've certainly seen a lot of corn in the South this year as we've traveled around. What do you think is driving the estimates on higher ethanol production for 25, 26? Is it just merely price that the margins are so high? So, or are some of these 15% ethanol changes helping?
Yeah, so I think the year-round E15 thing I think certainly helps. I think the while the June EPA announcement was more geared towards the biofuel and renewable diesel, or the biodiesel and renewable diesel, I should say, it felt like it was, again, solid on the ethanol expectations. I think it's just one of those industries that is very steady. It's not going to deviate a whole lot year in and year out. You might have a year that slumps a little bit, and then it'll rebound right back the next year. So I think it's just kind of keeping with those trends. But I think the margins right now probably certainly helped inform that estimate somewhat. Maybe the USDA is expecting kind of like we had last year. So last year we came out of the gate just very strong on ethanol production and corn usage, especially through September, really through December. we hit a tough period for margins in January and February and just never really recovered back to the levels that we were at in the fall. The rising price during that time also kind of hurt that as well. So I think maybe the USDA is just penciling maybe not quite of a drastic drop here as we move through the season. We also didn't have a huge summer bounce like we sometimes tend to. It was pretty muted especially compared to 2024. So um, I think for now they're just also just saying, the price of corn might be low, and all aspects of demand are expected to usually increase with a low corn price.
It's a little easier to store ethanol than it is to store corn, too.
Yeah, yeah, it certainly is.
Right. Especially as we're cleaning out some of these bins at the last part of the 24 season here. We know all about that. The other question that came in is on soybeans, with China not buying USA soybeans, and they're basically not buying Canadian canola either. Where are the crushers going to source enough oil seeds for their needs? Do you think that they've got everything that they will need, or as sometimes China is known to do, are they just waiting for the market to come down to the point where then they'll come in like gangbusters and start buying?
Yeah, so I think it's kind of a tale of a short-term and long-term situation to me. In the short term, I think given the record high crop in Brazil, I think there is a little bit more cushion for China to push the U.S. off a little longer, where typically October to February is a window that the U.S. really dominates the world exports, and especially the exports to China. I think that record crop has allowed them to get bought up a lot for October and even some for November, is what I'm hearing. So otherwise, the China does have a very healthy amount of reserves for soybeans. We've heard some murmurings that the state has sold some reserves back into the crusher's hands in China. So that could be a bearish development as we move into the new season. But I think as you flip to a long-term outlook, I think China is also aware that that's kind of a dangerous game to play. Brazil, as reflected in that price of export price we looked at, Brazil is very, growing on their domestic needs as well when it comes to the soybean market. So they're using more and more of those soybeans from October to February. They only have about 1.3 billion bushels of soybeans of a 6+ billion bushel crop left by October 1st. And they're really needing more and more of that to keep domestically, to keep their own crushers happy. So it really, in my mind, prices them out of the world export market. Of course, when you have a 34% effective tariff rate, that really just doesn't work from the U.S. even at this point. But it certainly works for other countries that won't be looking at Brazil and will likely be looking at the U.S. for as the supplier there. But anyway, for China, I just don't know if they want to really roll that dice with pulling too much against their reserves, and then all it would take is a poor crop from Brazil, and they would have to kind of come back to the U.S. Because even with Argentina pushing their exports, the U.S. is still clearly the only real viable second option to buy whole soybeans in bulk. So keeps me optimistic on the at least on the long term outlook. I think we could have some road bumps, some growing pains here in the short term, but more and more of these countries are just using the beans domestically, the U.S. included. So I don't think China necessarily probably wants to burn any bridges either. So I think it'll be interesting to see. I would think we'll probably be back at the table with negotiations here as we move towards November, that next deadline for the trade truce, as they're calling it. So
That would certainly be good if those negotiations continue to move forward. I think everybody will take a big sigh when that begins to happen, for sure. Well, those are the questions that we have in now. I'd like to thank everybody for being part of the webinar today. Again, this new platform, you get to see us for the first time. I don't know if that's a good thing or a bad thing, but we'll be using this format going forward. As Rhett said, our next WASDE is, or our next webinar around WASDE is after the October 9th report. And so we'll be coming to you same time, same channel. We will be downloading this webinar, and the rebroadcast will be available later this afternoon. You should be getting an email on that if you are participating. You can also go to our dtnpf.com website. So that's a different website than where you sign up for this. It's the DTNPF site. And the WASDE story covering things today, we will drop this link to the rebroadcast into that story. And so you can pull that story up and get the link from there. It'll also should be available on the DTN.com website, as we often have, we usually have. And that's the place where you go to sign up for these webinars. I want to thank everybody again for participating. Some great questions. Great to have Rhett back. This wraps up the webinar for today. But before I want to sign off, it's harvest season. I just want to tell everybody to be careful out there. We've already heard of some accidents. If you're running equipment up and down the road, please be careful. If you're not a farmer and you're running up and down the roads where farm equipment is, please put the phone down. Be careful. Be observant out there. We want everybody to have a safe harvest and get home to their families every day. Be careful cleaning out those grain bins and working those grain bins too as well. We always try to be cognizant around those kind of things, and so we want everybody to be safe. Thanks again for participating, and we'll see you in October.